What's up, guys? It's September 24th, 2025. And a nice day in the market. It's leg one, pullback leg two, and a trading range day. Did all right. I got a little fumbled in here. Kind of upset. I still caught the leg two, but just my entry was sloppy. I saw this, and then so bulls buy up here. They buy more down here. This green line is where my entry was at. And I saw this bar rally, and it missed my entry, sold off. So I actually shorted this bar here. And we got to when this bar started to rally, I exited because I thought it was going to be some sort of trading range day. Maybe we tagged the higher time frame EMA, and then I actually got long right around here. Failed, and as soon as this bar got followed through, I just reversed my position. So one loss, two loss, I reversed my position, and I went for the full leg. So how do I do this correctly? Something like that. My entry was right around here, and I got filled on this bar. I went for a little bit more than 1R. It's not a bad day. Options account did all right. I took a short right around here, and I was up decent amount down here, but I was betting on a retest, and I ended up getting out right around here. So still profitable, but they got crushed more than I would have liked. Going forward, I'm pretty happy with the day because trading leg twos, and as long as I follow that structure, it's keeping me profitable, and there's still room for improvement. There's still room, One thing maybe in the future, sometime next year, I would like to do, look, enter here. Oh, then I get a setup within the setup. Enter here. Oh, another setup within the setup. And maybe I enter here 3 times. Now, you see all 3 of these trades are profitable, but maybe I could have a bigger target like this and, really press my position with whatever my final entry is, just the average of these 3 entries. But that's a perfect world, but that's something I would like to work towards. So it's kind of cool knowing that I'm catching anywhere from 5 to 20 points a day, and there's still a lot of room for improvement. This is just one setup. I still don't have a reversal system and a lot of things. So keep that in mind. We can get very far trading second legs. We don't have to be. I watch a lot of stuff during the day. Something that really stuck out to me was I was watching like a video of Charlie Munger and Alex Hermosi. And there was this lady who said, she has 5 businesses, but none of them are doing amazing, and none of them are doing bad. They're just all kind of in the middle. Some make money, some months, blah blah blah. And she really wanted to take that profit to the next level. And the consensus, what Alex suggested, was drop 4 businesses and go all in on one. Once this takes off, you can start to branch out in different types of products, or in their case it was products, but for us it could be a different type of entry or a reversal system. So doing one thing is not just in the trading world, it's applicable to a lot of different things. Alex is a high-end entrepreneur, whatever he is, gym guy, and he's suggesting the same thing that a lot of our mentors suggest: focus on one thing and get really good at it. In this case, it's breakouts and second legs. So that's something to think about if you're not seeing the profits you would like. Maybe you can, instead of doing more, you can do less and look for better setups. But anyways, that's enough of that. Bears are getting follow through, something we haven't seen too often. Last time we saw that was September 2nd, so almost 22 days ago. Bears are getting follow through. Oh yeah, and I took a YOLO play. I bought a $10 call right here to swing into tomorrow, and I'll take profits at the open. I had like $10 left over in buying power, and then once I bought it, I did the math, and the market has to go to like right here for me to actually make a decent, like $100. So that might just get crushed. Still, we'll see what happens. The reason I bought it was from a higher time frame perspective, is that we have a trend line break. That's why I jumped back to that idea real quick. Weekly chart, 3 bull bars in a row, and now the market's starting to pull back. Bears want this to be a start of a big reversal down, something like this, but maybe even bigger. Let's see something. The Bears I got trapped up here. They're going to show, that's it up here. The Bears I got trapped down here. Short more up here, and then they want to get out break even. And bulls want to buy here for another leg up. So it'll be kind of interesting to see we'll update this throughout the week or months to come and see if that 50% mark gets tagged, or is this just a start to a, this is just a shallow pullback from another leg up. Daily chart on the right here. Leg one, pull back, leg two, pull back, leg three, or you could see there's a breakout here. Leg one, pull back, leg two, pull back, and now we're trading into that third leg. So bears get trapped shorting down here. They have to short more to get out at break even. I want to see something real quick actually. Because if it's a bull spike, we start from the bottom and pull up. So the red line should be opposite. It should be negative 125. Nope. Positive 125. No. What should this be? No. No. What did it have to be for the line to be up here? I thought it was 1.25. So this, something's not right. I'll just fix that later. So bears short down here. They short up here. The buyback price is right here. They get out break even. The market starts to rally. On the contrary, bulls buy the highs here. They're trapped. See, it's weird. It's like opposite. So bulls buy up here. They buy more down here. This is their break even price. So we'll see who gets the leg one, leg two first. Bulls have had 3 legs up, and now this bar is getting followed through. It's a bear bar closing on its low. We have another bear bar closing on its low. So we'll see what happens. Bulls buy up here. They buy more down here. Their break even price is right here. Bulls sell at longs, and then bears will target the previous low, and then 1R, 2R, 3. So we'll see what happens. Anyways, let's get this day started. Look at that, inside bars, reversal, inside bars. I still haven't done that. It's going to be a little bit of time before I get back to that study, but I'm just cognizant of it for the time being. Yesterday we had a pretty strong sell-off for the majority of the day, ended in trading range. Look at this, actually, I want to show you guys something. That's a trading range because of the yesterday's swing. And then this is a trading range. Like almost tested the breakout point from the low of 33. So we barely had a trend day, although it felt kind of more bearish because of yesterday's price action of these strong bear bars. Reality, we was in a trading range here, sold off for one leg and went to another trading range. So kind of a not really even a trending trading range. It was just buy low, sell high, buy low, sell high, buy low. Gap up, bar one's a bear bar, has a tail, so bulls were trying to buy it, and then we see bar two, bear bar closing on slow. Strong to get followed through, and then we see bar three. That's 3 bear bars in a row. The entire price structure is strong to get followed through, and it does with bars 4 and 5. Now bears have put in a gap, and I'm looking to get short somewhere. I got short here, but ideally it's the 50% mark, fill it on 11. Bulls have multiple legs up. They're trying to push leg 1, pull back leg 2, pull back leg 3. That creates a wedge top right around resistance. It's invisible resistance, and we're under the higher time frame EMA, so bears have the upper hand. The bull spike from the low of 5 to the high of 6, strong to get second leg. Bears short down here. They short more up here. Buyback shorts, leg 1, pull back leg 2. This is kind of hard to trade. It's a tight trading range. Bears get 2 legs down, leg 1, pull back leg 2, and then bulls get another rally up. Even that came in the form of 2 to 3 legs. There's a hidden leg here, pull back, leg 2, and there's some sort of pullback here, and then leg 3. Just so you guys can see what I'm talking about, we'll zoom into the 1 minute chart real quick. See, that's what I was talking about. There's a hidden leg. There's the 3 legs. Leg 1, pull back, leg 2, bar 81 sells off, and then leg 3, climactic price action by the bulls. And then we get that nice reversal bar 17. I think 17 is good to sell the close because of the context. You have a bear bar, trading range, and now bears rally. This tail lets us know that bulls are trapped and sells off, so bulls are selling out of longs. We get followed through 18 and 19. 3 bars in a row, strong to get pulled, strong to get second leg down, and we see a nice second leg with bar 21. Immediately, we're in the trading range lows, and bulls are buying the lows. You could make a scalp here if you had a limit order with bars 22 and 23, but that ends up being just a pullback for the entire channel down from 17 to 21. The bulls that buy up here are going to buy more around support and get out at break even on 23. See, I don't like that because the bear spike starts up here. So since the bear spike starts up here, it should be like this, but the line is the opposite. I gotta fix those numbers after this. So the bear spike starts on 17, sells off to 21, rally into the 50% mark, which lines up with the EMA in this case. It sells off for that nice leg one, leg two, leg one, pull back, leg two, and you see 1.5R was hit. But then this breakout becomes strong. This breakout starts to pick up and it becomes strong with a gap here and here. 3 gaps. Very good for the bears. They have the higher time frame EMA working with them. And then let's say the breakout resets. Leg 1, pull back, leg 2, pull back, leg 3. Or you could say leg 1, pull back, leg 2, pull back, leg 3. And if you were watching this bar rally, it sold off. So there's a hidden bear leg on bar 34. Market rallies 34, 35. There's a gap now. Bad follow through 36, but I think this price structure is strong to get second leg. Leg 1, pull back, leg 2, pull back, leg 3. It's a wedge top into resistance. I actually added into my options position here. 50% pullback. That's not how I drew it. I think I drew it like this. And I added, as soon as this bar closed, I added a position, but it got crushed anyway. So I made it like $200. 50% pullback, pulls buy up here. They buy more down here, get out, break even. This middle line sells off for bars 50 through 53, and that structure is strong to get its own second leg. Unfortunately, the 50% pullback was not tagged, so that's a trade I would miss. But if you were going to short the close of bar 53, you could catch the second leg down from the 54 high to the 57 low. Then we get a reversal bar, it sells off and then rallies bar 57. Trapping bears here. Bears are going to have a quick opportunity to buy back shorts, so they can short here, short up here. They buy back shorts in bar 59. And the market rallies for several legs higher for the rest of the day. Leg 1, pull back, leg 1, pull back, leg 2, pull back, leg 3. Sideways price action. Bears get 2 to 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. So wedge bottom around support, and then market gets 2 legs up. Leg 1, pull back, leg 2. You could even say leg 1, pull back, leg 2, pull back, leg 3. And the bears that short down here, look, the bears that short down here, short more higher, they get out at break even right around this green line, and does get a second leg, kind of a deep pullback, but no closes below the 75% line. That's why I have this blue line here. So we get filled here, and then you actually do make your 1R. So giant leg 1, pull back, leg 2. And this leg 2 happened within 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Pretty cool day structurally. And yeah, I hope you guys did good. We got 2 days left, so let's finish strong and trade smart. You guys have a good one. Thank you for your time. I'll talk to you guys later. Bye.